Hello, traders. Gary Wagner here. It is 12:25 in Honolulu, 6:25 in New York on Wednesday, 12th day of October 2022, and this is the Daily Report for gold and silver. The dollar had very little to do with price changes in both silver and gold today. The dollar index itself was up fractionally by 0.03% and is currently fixed at 113.16. Gold declined slightly on the day, about $6, and is currently fixed at $1,680.10. This basis the most active December contract. You can see it had a lower high than yesterday, closed under 1680. And these are called tweezer bottoms when you get equal lows on a daily or a weekly chart. Silver did not fare as well, giving up 2.5%. More importantly, breaking below 19. After factoring in today's decline of 2.52% or 49 cents, we have December silver at $18.99.5. The release of the Federal Reserve FOMC meeting minutes from last month definitely had a negative impact on gold pricing. The concern, of course, is that the Fed will continue to raise rates at an extremely aggressive rate. The question I raised in our opening letter today was that while they're acting in a reactive way now, had they been more proactive, I really don't believe we would be where we are now. That being said, what do we do with the current scenario? When we look at gold, it is quite easily possible that we will see gold decline further if they continue along to raise rates to 4.5% or 5%. As you know, I have believed for the longest time, along with other economists, that when we look at history, you have to raise interest rates to match the level of inflation to reduce it. We have a 2% target, even if you look at the PCE, and that's not realistic because people use energy and they do eat food. That's at 6.3% and rising. You need to raise interest rates to 6% to have an effect on it. If that's the case, that means they're going to have to double it. And if they do that, what will that do to the dollar and what will that do to gold? Obviously, we'll continue to pressure gold lower and the dollar higher. Now, today, on a technical basis, what I'm looking at is as follows. We do have, I believe, pretty solid support at $1,670. That is based on a shorter-term Fibonacci retracement, which begins at $1,823 down to these lows at 1621. And you can see the 23.6% Fib retracement level. You also know that I have been adamant about 1680 being a key and critical area. We did close above that yesterday, but we did not close above that today. That being said, we're currently trading right at it. In Australia, on a technical basis, my current levels for support and resistance are as follows. In terms of levels of support, I first started about 1660. That is based on only one thing, and that's some recent bottoms that occurred in about the middle of September, these two here. With our first real important level of support at 1670, that is Fibonacci based, and then our first level of resistance comes in at 1680. We're currently at 1679.90 with our real level of resistance coming in at 1700. That is a couple dollars above the 38.2% Fibonacci retracement, and then $1,722, the 50% retracement with major resistance just below 1750. In terms of trend and strength of trend, first to the Henkin Ashi charts, we are clearly still in a bearish trend after hitting the 50-day moving average and unsuccessfully trading above that. We can see that over the last 3 trading days, although the candle size has gotten slightly smaller, there is the absence of upper wicks, very important, and this last one really has no meaning as it is representing the beginning of trading in Australia. The last chart I do want to look at on today's video report is a 3-line break chart. We can look at the projection in magenta, which clearly alludes to the bearish posture continuing. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow following the release of the CPI for September. Have a great day. Bye-bye.